Before you even think about applying for your next credit card, make sure you watch this video because there are things that you should never put on a credit card application. What's up, winners? My name is Nam. If you're new to this channel, welcome. Here we talk all things personal finance and credit. Starting out by subscribing so you don't miss out on any future videos. So from a person who has a booklet full of credit cards, I know how frustrating it can be when you get denied. So let's dive right into it and go exactly what you should put on a credit card application and things to avoid. As a disclaimer, I never advise you to lie blatantly on your credit card applications. So whatever you do decide to put on your credit card application, just do it at your own risk. The first thing that you gotta realize is that with any type of credit application that you apply for, whether it be a credit card, a loan, or anything else, your application will help the lender determine how risky you are. If you understand that premise, that's how you should navigate a credit card application. For example, let's just say that you have a cousin named Dwight, and every time that you lend him $10, he never pays you back. In this instance, Dwight does not seem trustworthy. Why would anybody lend you money if they know that they won't be repaid? So now let's go over a credit card application through Bank of America. Just like any other credit card application, you need to put in your personal info. This can include your name, residential address, phone number, and social security number. The first thing that you gotta be cautious about is your employment status. Because in this drop-down menu, you can see employed, homemaker, retired, self-employed, students, and unemployed. So based on my own personal experience and other data points, you have the least amount of friction if you go with the employed route. Even if you are a business owner, you are employed by your business technically. Though you may be a sole proprietor, if you say that you are employed, it will just be much simpler. The majority of credit card applications out there go through an algorithm that goes through AI. So automatically a computer is processing most applications. Smaller banks and credit unions may have to manually review it, but this is rarely the case. So how banks and credit unions mitigate risks is by ensuring that the individual has a steady income. So if you are a homemaker, retired, student, or unemployed, right there it already shows that you have a lack of finances. But this does not necessarily mean that you'll get denied automatically. I believe that most negative things that you can put in an application will either be saying that you're a homemaker or unemployed. Yes, you can still get unemployment, but this is temporary and it won't last forever. You may also get alimony or child support, but those amounts may or may not be enough for a lender to approve you. Unless you recently got divorced by a basketball player or a high-earning individual, then your alimony payments may not be enough for lenders to feel comfortable extending you a line of credit. Now, let's talk about self-employment for a second. So if you are a contractor or 1099 employee, you are technically self-employed. The thing about these individuals is that self-employment income is most likely not consistent from month to month. Even if you were to work in an office as a salesman and your income may fluctuate due to commissions, but you probably get a base salary that lenders can depend on. Now for my younger audience or people who currently are students, there are specific credit cards that are tailored towards you guys. So there are some banks and lenders that have student credit cards that make it easier for you to get approved, but usually you have to build some sort of relationship with them. Most of the time, this is by opening up a checking account or having a certain amount of money inside of your account before you can trigger an automatic approval. But if you are a student who also works, then just put down that you're employed. Because if you are a student who gets financial aid, then it's usually not enough to count towards income since it is inconsistent. Now, the second part of this video is gonna be talking about the income that you report. So out of all the credit card applications I've done, I have never in my life have yet to have a company ask me to prove my income. Of course, your mileage may vary depending on how much you report, because my wife actually had to prove her income in one of her recent credit card applications, but this was her first one out of many. So one thing that you must know is that with most credit card applications, especially with big companies, this is just stated income. I'm not telling you to lie about your income, but it is okay to put down an estimate or a ballpark range. The chances of these companies actually asking you to prove your stated income is very low. But if requested, you may have to show your tax returns, bank statements, or pay stubs that show that you can make this amount of money. There has been times where I applied for credit cards with my previous W-2 job, then once I was self-employed where my income was much higher, and both times I did not get denied for a credit card application. Now for me personally, whenever I report my total income, I report everything. I just don't report my W-2 pay stubs or whenever I get paid from a business. If you get any sort of alimony, child support, VA disability, or any other type of income that you get on a consistent basis, I'll report that on your total income as well. So this application asks for your primary source of income. Not all credit card companies will ask this. Someone may ask for non-tax deductible income or pre-tax income. In the case of this application, it will ask for your primary source of income from employment, trusts, investments, retirement, Social Security, or unemployment. So as previously mentioned, depending on your employment status, whether you're retired or a homemaker, the amount of income that you report must be high enough for the lender to think that you are lower risk. So if you are a higher risk client, but you're still able to meet the income requirements, they may just start you off with a lower credit limit. With most credit cards out there, there's usually a threshold of income that you would typically need to make in any given year to qualify for. So for instance, the Chase Sapphire Preferred, if you do a quick Google search, it is recommended that you make at least $30,000 per year. Honestly, this was a surprise for me because this is a mid-level travel credit card, but given the fact that there's only an annual fee of $95, and as long as you meet all of the other criteria, such as a good credit score, then you should be able to qualify. There has been other many data points that state if your income is reported too high, then this kind of gives your account a red flag as well. So there's really no exact number of what income is counted as too high, but based on your credit report, it should state your employer and occupation. This may give some insight into income levels not to flag. Your credit report also states where you live and other personal details. There are possible algorithms that determine what is the average income for the area, age, and other factors. So if you live in a city where the median household income is $50,000, but you're reporting that you make $500,000, this may raise some red flags, but just take this with a grain of salt because this does not automatically mean that you will get denied. You may just not get an automatic approval, and it could take a few days for them to review your application. Additionally, when you think about income, I normally put down household income. So if you have a spouse that works as well and contributes to your household, add their income as well. To be honest, I know that each individual credit card application pertains to you personally, but if you were to apply for a credit card, but your housing payment is high, this may make it look like your debt to income ratio is higher. So imagine that you and your partner live in an expensive part of town. If you were to put down your mortgage or your rent, depending on your personal income, this may make it look like you're stretching yourself thin. So if you were to go off the route of just your personal income and you live with someone else or roommates, just only put down 1/2 or 1/3 of whatever amount of housing that you pay. Also, only put down your rent or your mortgage. Don't include utilities or anything else like that. Now, since I cover a lot about personal credit cards, now let's move on to the business credit card side of things. It's really not that difficult to get a business credit card in your name, even if you don't have a business quite yet. If you want to know how to get a business credit card without an actual business, come check out this video up here. To actually get a business credit card, you really don't need to have a separate business address or business phone number, but it does help to actually have one in place. One thing that I do recommend having is at least have an EIN number. Even if you are a sole proprietor, you can absolutely get one for free through the IRS's website. No, it does not matter what your business structure is. As long as you're not in a high-risk industry, the banks are more lenient to working with you, even if you even have not started your business yet. Some examples of high-risk industries will be credit repair, gambling, and cannabis. The application will usually ask for your business NAICS code. This is usually a 6-digit code that labels your business type and industry. So the only way around this is that you gotta find something that your business does that would lower your risk. I'm pretty sure that you can find something that falls into the lines of your business. Now, when it comes to the personal side of business credit cards, it's gonna be very similar to what you would do during a personal credit card application. So your housing income, source of income, housing status, occupation are gonna be very similar of when you apply for a personal credit card. So knowing all this information that I did provided, there are gonna be some reasons on why you get denied for a credit card application. For instance, if you have any derogatory or negative marks on your credit report, the likelihood of you getting approved is going to be very low, especially if the derogatory is going to be recent, like within the past 2 or 3 years. If you had late payments like 5 or 6 years ago, then this may not affect you as much. So if you had one like 6 years ago, the bank may see this as a mistake and still approve you for that application. So the only way around this is to try to rebuild your credit or try to repair your credit. There are many online resources where you can figure out this for yourself. Plus, I have also made videos on credit repair also. But if you want everything that's in a condensed matter and laid on a silver platter, I do have an online course that teaches you how I personally repair credit. But again, I'm not trying to sell you on anything like that. It's just there if you like to purchase it. Another option that you can take is by seeking out a credit repair agency. I would highly recommend seeking out an agency that gives you a money back guarantee, usually within the first 3 months or something like that if you don't see any results. I will list a few recommendations in the description. So there you guys have it. I went over what to never put on a credit card application and what to do about it. If you want to hang out with me some more and learn more about credit, check out these videos right here. I'll see you over there.